Pohkong, which opened its first store in Petaling Jaya in 1976, is still at the forefront of the jewelry business and is experiencing enormous growth. Pohkong has seen even more success since its foundation thanks to its listing on Bursa Malaysia since 2004. Pohkong now has its own manufacturing plant in Shah Alam, and in 2011, it opened its 100th store, cementing its status as Malaysia's largest jewelry retail chain. Cocoaland is an investment holding company engaged in manufacturing and trading processed and preserved foods, fruits, and other related foodstuff primarily in Malaysia. The tale of Cocoaland began when two brothers worked as street sellers in the Klang Valley selling deep-fried snacks like banana fritters. They were then joined by more brothers and they moved upstream in their commercial activities to take advantage of better profit margins.
Pohkong Holdings Berhad and Cocoaland Holdings Berhad are both well-established companies with strong financial foundations in Malaysia. With both being in different industries, we would like to analyze and evaluate their financial statement in 2017, 2018, 2019, and 2020 consecutively. Subsequently, we will make a comparison between and within the companies. Our objectives of financial statements analysis are mainly focusing on: first is to analyze both vertically and horizontally the changes of Pohkong Holdings Berhad and Cocoaland Holdings Berhad financial statement components from 2017 to 2020. Second is to identify the potential problems faced by the companies by analyzing its liquidity, solvency, and profitability ratios. And lastly, to compare the performance of Pohkong Holdings Berhad and Cocoaland Holdings Berhad in terms of liquidity, solvency, and profitability. Horizontal analysis is a technique for evaluating a series of financial statements data over a period of time. The trend and changes are measured by comparing the current year's values against those of the base year. The goal is to determine any increase or decrease in specific values that has taken place. The increase and decrease can be expressed as either in an amount or a percentage. For statement of certain comparative balance sheet, we compare the two companies by using their current assets, non-current assets, and total liabilities. For statement for certain comparative income statement, we compare the two companies using their gross profit, profit before tax, and profit for the financial year. For current assets, as we can see in 2018, Pohkong had an increase compared to 2017 due to most accounts in the current assets increase. Cocoaland had a decrease due to their inventories and trade receivables. In 2019, the role is reversed as Cocoaland had an increase due to their other receivables, and Pohkong had a decrease due to most of their accounts in current assets decreasing compared to 2018. In 2020, both companies had a decrease in their current assets. For Pohkong, it was due to the decrease in their inventories. For Cocoaland, it is due to most of their accounts in current assets decreasing. As we can see based on the graph, none of the companies has a consistency in their current assets trend. For non-current assets, as we can see, in 2018, Pohkong had an increase compared to 2017 due to their investment property and deferred tax asset, while Cocoaland had a decrease due to their property, plant, and equipment. In 2019, Pohkong kept on increasing due to their deferred tax assets, while non-current assets of Cocoaland kept on decreasing due to all of their accounts under non-current assets decreasing from the previous year. In 2020, both companies had an increase. For Cocoaland, it is due to their property, plant, and equipment, while for Pohkong that managed to have a streak in a decrease for the third consecutive years, it is due to their right-of-use assets. And last, for the liabilities, as we can see in 2018, both companies had an increase. For Pohkong, it is due to their loan and borrowings, while for Cocoaland, it is due to their trade payables. In 2019, both companies had a decrease in their liabilities because of the same reasons with the previous year. In 2020, both companies still had a decrease in their liabilities. For Pohkong, it is due to their loan and borrowings, while for Cocoaland, it is due to all of their accounts and liabilities decreasing. As we can see based on the graph, both companies kept on decreasing since 2018.
Horizontal analysis on the income statement. Please note that the base year is 2017. In 2018, both companies had a decrease in their gross profit, but for the Pohkong, even though the gross profit decreased, the amount of revenue and cost of sales increased. But both companies do increase their gross profit in 2019 by reducing the cost of goods sales, but they fail to maintain the performance in 2020, causing the decrease in gross profit. In 2018, both companies had a decrease in profit before tax. Cocoaland Holdings Berhad recorded a decrease to 68.95% due to the less revenue collected in that year, while Pohkong Holdings Berhad recorded a decrease to 71.72% due to the extra cost on administrative expenses. In 2019, profit before tax for the Cocoaland Holdings Berhad at an increase from 2017 and 2018, even though they had extra costs to pay in that year. But in 2020, Cocoaland Holdings Berhad had an extreme decrease in profit before tax due to the lesser amount of revenue collected in 2020. They also had to pay for the final cost and net gain or loss on impairment of financial instrument. While Cocoaland recorded the least profit before tax throughout the 4 years, Pohkong Holdings Berhad recorded the most profit before tax throughout the 4 years, even though it had the most administrative expenses to pay. It is because they managed to decrease the selling and distribution expenses in 2020. Both companies had the same trend for the net profit of the 4 financial years, which started with a fall from 2017 to 2018, but keep on rising in 2019 but fell off in 2020. In 2018, Pohkong Holdings Berhad recorded the least net profit, even though in that year they recorded the least income tax expense. Same goes to Cocoaland Holdings Berhad, they recorded the least net profit, even though in that year they had the least income tax expense.
Vertical analysis is a method that analyzes each line on a financial statement for the balance sheet and income statement. It is also known as common size analysis. Although Pohkong Holdings Berhad and Cocoaland Holdings Berhad are in very different industries, vertical analysis made the comparisons between these two companies possible. It is clear that both of the companies had worked consistently throughout the 4 years to gain very fine margins each year in their financial statements. However, when comparing the two companies, there are some stark differences between them.
Pohkong recorded a decrease in current assets throughout the year 2017 to 2020, whereas Cocoaland recorded a slight increase from 2017 to 2019 and a decrease during 2020. Based on the vertical analysis comparative balance sheet, we could see that Pohkong current assets are most affected by the inventories, while Cocoaland are most affected by the deposit, cash and bank balance. Next, we can see both companies show increased liability from 2017 to 2018, then decreased from 2018 to 2020. The liability for Pohkong do not show a big difference between each year, same as Cocoaland, but Pohkong's percentage for liability is higher than Cocoaland. As liability is the company's obligation, this indicates that Pohkong has more debt compared to Cocoaland. This is proven in the balance sheet when Pohkong recorded loans and borrowing for the year 2017 until 2020, while Cocoaland only recorded the bank borrowing for 2019. For the total owner's equity, we can see that both companies have a positive total equity. This indicates that both companies has enough asset to cover their liabilities. Pohkong's equity decreased from 2017 to 2018, while increasing in 2019 to 2020. Cocoaland shows the same trend, which is decreasing from 2017 to 2018, while increasing for the next 2 years in 2019 and 2020. Cocoaland has higher total equity compared to Pohkong, which indicates that Cocoaland has a larger proportion of the company's share compared to Pohkong.
The gross profit of Pohkong recorded a decrease from 2017 to 2018 and in 2019. In 2020, it recorded a gross profit that surpassed the 2017 record, amounting 26.55% of its collected revenue. However, for Cocoaland, it recorded an increase for 2 consecutive years from 2017 to 2018 and to 2019, and fell a little bit numerically in 2020. Their gross profits were relatively in the same range, but Pohkong always recorded a lower gross profit annually than Cocoaland, except in 2020, and that was due from Pohkong's higher cost of goods sold compared to Cocoaland. The percentage of profit before tax of Pohkong was also comparatively very low to that of Cocoaland. Pohkong's highest percentage of profit before tax was 5.21% in 2020, meanwhile Cocoaland's highest numbers was 18.62% in 2019. Pohkong's profit before tax plummeted in 2018 from 2017 and steadily increased in 2019 and 2020. On the other hand, Cocoaland's numbers continually increased from 2017 to 2018 and 2019 but fell off in 2020 for profit before tax percentages. Other than that, the total percentage of profit for the financial year from 2017 to 2020 of Cocoaland was remarkably higher than Pohkong. The reason for this is from Pohkong having to spend more on expenses like financial costs to make annual target sales meet, and Cocoaland earning more from other income than Pohkong, indicating that Cocoaland's effort to earn more money from activities unrelated to the main focus of the business worked. The trend of net income of the 4 financial years for Pohkong started with a fall from 2017 to 2018 but kept on rising from there onwards in 2019 and 2020. Cocoaland also had a very similar trend to Pohkong, where its net income fell off for a little bit in 2018 from 2017 but continued to increase in 2019 and in 2020.
Ratio analysis. We can classify ratio into three types. First, liquidity ratios. Liquidity ratios measure the short-term ability of the company to pay its obligations and to meet unexpected needs for cash. Usually, short-term creditors such as bankers and suppliers are interested in assessing liquidity. Second, solvency ratios. Solvency ratios measure the ability of the company to survive over a long period of time. Third, profitability ratios. Profitability ratios measure the income or operating success of a company for a given period of time. These are the results of liquidity ratios for Pohkong and Cocoaland. We will discuss the current ratio and inventory turnover. Current ratio widely used for evaluating a company's liquidity and short-term debt paying ability, while inventory turnover measure the liquidity of the inventory. The current ratio for Pohkong in 2017 is 3.44 and decreased to 2.68 in 2018. However, the current ratio increased consistently from 2018 to 2020 and reached the highest current ratio in 2020, which is 3.87. The business has enough current assets to meet the payment schedule of current liabilities throughout the 4 years. The current ratio for Cocoaland in 2018 decreased compared to 2017 and reached the highest current ratio to 6.44 in 2020. The current ratio for Cocoaland in those 4 years exceeds the current ratio for manufacturing companies, which is between 1.5 and 2. High current ratio may mean that the current assets are not being utilized in an optimal way. The excess current assets might be better invested in order to be efficiently used. From the current ratio, it indicates that Cocoaland has a better ability to pay off the short-term liabilities compared to Pohkong. For the inventory turnover, even though there are huge differences for the ratio, both companies show a good inventory turnover ratio in their industry. It is normal for jewelry industry to have a low inventory turnover. From the inventory turnover ratio, both companies efficiently turn their inventory into sales and show good production efficiency. Based on the liquidity ratios, the financial health for Pohkong and Cocoaland is in a good condition. Solvency ratios. Under the solvency ratios, we will discuss the debt to assets ratio. Debt to assets ratio for Pohkong and Cocoaland is low, which is less than 100%. The lower ratio shows that the company has more assets than liabilities and could pay off its obligations by selling its asset if it needed to. This graph shows the comparison of debt to assets ratio between Pohkong and Cocoaland. The debt to assets ratio of Pohkong is higher than Cocoaland. It means Pohkong is considered more risky to invest in and to loan to because Pohkong is more leveraged than Cocoaland. This situation is normal because Pohkong sells the luxury product. It is normal debt to assets ratio for the luxury industry. Based on solvency ratios, we can conclude that Pohkong is less solvent than Cocoaland. Profitability ratios. We will discuss profit margin and gross profit rate. Profit margin measure the percentage of each dollar of sales that results in net income. Gross profit rate indicates the ability to maintain an adequate unit selling price above its unit cost of goods sold. The profit margin for Cocoaland is good as a manufacturing company, while the profit margin for Pohkong is considered low as a jewelry company. Pohkong has low profit margin because the sales is high but generates low income due to the higher cost of expenses. Gross profit rate for Pohkong and Cocoaland shows a great potential to improve gross profit rate in future, hence improve the efficiency of the company.
From the result and discussion above, we know that both Cocoaland and Pohkong Berhad have experienced fluctuations over the past 4 years based on net profit shown in profitability ratios. However, Cocoaland Berhad has a higher profit margin compared to Pohkong Berhad. Hence, Cocoaland Berhad could take this opportunity to formulate future plans so that this profit margin will increase in the coming years. From the current ratio, it indicates that Cocoaland Berhad has a better ability to pay off the short-term liabilities compared to Pohkong Berhad. Nevertheless, both companies are in a healthy condition based on liquidity ratio. So, we can conclude that financial statement analysis is significant to know the solvency and stability of a company to make sure investors keep investing in the company.